Welcome back. In business news, Asian shares are higher following a rally on Wall Street overnight. Trade remains cautious after President Barack Obama and congressional Republicans found no breakthrough on talks over a government shutdown and extending the U.S. debt ceiling. Japan's Nikkei is supported by the dollar's strength against the yen. And down under, Australian shares are rebounding from one-month lows. Banking counters are leading the charge on expectations of stronger-than-expected margins, asset quality and dividends. Well, to discuss with us about the uncertainty in global markets is William Wiranto of Barclays Wealth. He joins us from our City studio at OCBC Centre. Now, William, President Barack Obama and congressional Republicans found no specific way forward to break the impasse over a government shutdown and extending the U.S. debt ceiling at the latest meeting. Do you see a last-minute deal?
Messy situations like this in the U.S. always remind me of some wise words from Winston Churchill. He said, you can always trust Americans to do the right thing, but only after they've exhausted all other possibilities. I think we're in a similar situation from a fiscal cliff of last year. At the end of the day, they do find some common ground to settle. They might just kick the can down the road again, some postponement of the debt ceiling, reopening of government that is currently shut down. We do see some possibilities of that happening. Obviously, we're running out of time. We're barely a week into the October 17th deadline. But because of that, I think the government and relevant officials at the Congress, etc., will find the right thing to do, which is to strike a solution.
So how are markets reacting then? For weeks, investors brushed aside the mounting trouble in Washington. How do you think the markets will respond to an actual default if it happens?
Well, the actual default is still a remote possibility now in our view, but going by Treasury Department's own words, the situation will be catastrophic. The risk-free rate that we use to value assets across the world, all these are based on U.S. Treasury rates. If we cannot know exactly what the U.S. Treasury rates should be and it will be higher, then all bets are off. But simply because the situation will be so catastrophic, going back to the first question you asked, then the politicians will come to an agreement in time.
Well, the S&P 500 has piled up a string of losses since last month's record high. Do you see the declines as buying opportunities?
For those who can ride out the volatility, yes, I think it doesn't take a genius to know that the volatile situation will still be with us unless the situation settles down. Take a step back, I think we'll continue to like developed market equities. Outside of the U.S., we see opportunities in Eurozone and Japan as well. Both economies have been doing quite well.
What can we expect from the current U.S. earnings season, William?
Overall, I think expectation for going into the earnings season has been relatively muted, I would say, so it doesn't take much to surprise on the upside. What I'm more interested in is to look at corporate management's guidance, what the views are on the current situation, and what has it impacted their plans to invest and broaden their businesses. That will be what I'm most interested in.
Do you expect the Fed to start tapering its monthly bond purchases by the end of the year?
There's still a chance. Obviously, they've refrained from tapering in September. Looks like it was a good thing to do, given what's going on the political front. There's some talks about them tapering October. I think that's a no-no. At the end of the day, the Fed needs data. Judging from the minutes of the previous meeting, they continue to be very, very data dependent. Obviously, with the government shutdown, we don't even have proper data for NFP, so that's going to be a tough call. But we see the chance of them tapering still by the end of this year in December.
Has the nomination of Janet Yellen to the Fed chair benefited emerging markets in Asia from further selling pressure?
In the sense that Yellen is one of the more dovish candidates, and she's an old hand at that, and a good hand at that. I think it helps emerging markets. But it takes more than Yellen's nomination. It takes more than her confirmation to save emerging markets from selling pressures. At the end of the day, emerging markets with current account deficits have to sort out their own houses in order. In some ways, Yellen is just helping them help themselves.
Well, the Philippine market is a top performer in Southeast Asia this year, up about 11%. Can the momentum continue for the rest of the year?
Well, judging from the economics front, Philippines continue to post very good growth. In fact, it's going to post likely to post the highest growth rate in Asia outside of China. But from the asset market perspective, liquidity of the Philippine market remains among the lowest in the region. So it's going to be a tricky situation there. At the end of the day, also a global call on the whole situation in the U.S.
And just one more for you. Do you think that Singapore's benchmark STI at 3,100 offers bargain hunt opportunities on the presumption that the US does not go into default?
In selective sectors, yes, I think some of the sectors have sold off, including because of the tapering fears of previous months. The sectors like REITs, we can look at it favorably. Also, the back of it, you're backed up with a very resilient Singapore dollar and strong banking system.
Okay, thanks so much for joining us, William Wiranto of Barclays Wealth there. And that's business for you. Back to Patrick and Suzanne.